Good morning, everyone. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to take a look at oil first because it's running off the rails. My suspicion, take a look, always got to look at the big picture first. My suspicion is that maybe a lot of people listening to the hype of, ooh, we've got a big deflationary event, this is going to fall to the floorboards, they get involved on the lows because of trend, right? Trend will say, hey, if you get involved on the lows, just a little bounce and then, you'll be in the right side of the trade. For me, I like looking at the bounce into resistance that fails. And so what I suspect here is some trapped shorts, as well as some folks saying, you know what, I'm a perma-bull with oil, which I think I probably am one of those, and so I'm going to buy the dips, which of course is why I have us in that butterfly that is doing so well. So that being said, here's what we're looking at. Last couple of times I brought oil onto the screen, I said, hey, listen, if it's sideways, it's not going to get above 72. And if it does, it should plateau out at 73. Well, here's what happened. It went to the 73, 74 area, faded, and held our old resistance as new support. Guess what? When that happens, it's a buy zone. So where's the next place they're going to go? I think it's right into this zone, right? All this heavy congestion. Anywhere in the 76 areas, it could really stop cold right there, 75.69. CPI numbers came in. They were not hot. The market loves it. Everybody's super excited about X, Y, or Z. The question is, if inflation is going to come down continually, this chart is going to reverse. Otherwise, it's going to filter into the market. But that's neither here nor there. We don't really talk about macro-focused events in this. I'm just a girl that looks at candlesticks and says, hey, listen, did they buy the last time they came to that number? I mean, I truly am a simpleton when it comes to trading. And so, yes, my husband would argue outside of simpleton trading except for any place else. Okay, so here is now where we are sitting, right? I shifted up that 72 number just a little bit to pull it to the edge of this area. That's what we're going to watch in oil. I expect the price action to exhaust because I do believe there are short sellers sitting up there. Let's go to the ES. And the ES, very nicely, I did take all of my markings off because they were getting cluttered and driving me insane. And so here is what's happening. We've got grinding motion to the north. Look at what's happened for the last few candlesticks. High retracement for the week. Another high retracement for the week. Another high, I don't know what's going to happen. Next week, a retracement for the week. If it's going to keep this pattern, that's what we're going to look at. There's grinding motion everywhere you look. Now, you look at monthly and you go, wow, that looks like a great recovery. But if you take a look at the yearly candlesticks, exactly the same thing. I mean, this is a grind. We are caught in a 1,200 point range. Plenty of places to trade. But that really is what we're looking at. And so this number, right around this 4,500 area, my suspicion is that the pre-market high is going to be the high of the day. If I'm wrong, guess what's going to happen? We're going to break the pre-market high. And if we break the pre-market high, it's going to bring a whole new group of short sellers that are trying to buy to cover. And that is going to put sellers on the back foot. And there's going to be more buying, and that's going to be 45.40 for the next one, 45.87. On the fade, let's say it fades. What do? Look to the last two candlesticks. What are they saying? Well, 44.70, right? My initial thought process is as long as it sits above 44.70, pullbacks are going to be buy zones. Now, that's a I mean, that's 30 points of motion. It could really just sit and stay at 44. I think it's really 85. Something like that, right? 44.85, that's going to be that zone, that big noisy patch right there. So we'll see how these traders are going to battle. I know a lot of long-term futures traders are saying, hey, listen, we're going to go to 45.40, 45.87, and then, hit the rails on the 47.50. So there's a lot of upside motion there. The question is, are you going to be able to sit in it while it sloshes back and forth? That's really not my game. And so here's what I want you to look at. To see if these charts are going to hold their breakout levels, you want to watch them at their highs. And here's how you look at a reversal. 1, am I failing to hold higher? Yes, that's with this first candlestick, failed to hold higher. 2, have I broken support? Well, we'll say the support is the first upward candle, the close of it, so you can go, yeah, I did. But the next question is, on the bounce, which will come because it is upside motion, do I fail to make a new high? Or do I make a lower high? If that answer is yes, you've got short traction in progress. If the answer is no, your short's wrong, right? 5-6 points, you're out of the game. And that works for any chart on any time frame in any way, but that 5-minute gives us as intraday traders that motion to move. Let's take a look at the cues. We know we have a rebalancing that's coming on the 14th. Holy smokes, look at that. Monster move. What's the high here? 432, and then the high here, 475. 430, we're above 432, that's for sure. Up here, no, we're below 432, excuse me. Take a look at this. This one looks stronger, right? Have I failed to hold higher? Yes. Have I broken support? No. That candlestick area right here is clearly showing us support. In order to have any kind of price action, that's not a scalp. Scalping, you can do a totally different mechanic. Scalping works, but here, for more downside flow, it's got to break the support ledge and then bounce to give you a lower high. Right here, if you took the short, your stop would be 35 points, which, I mean, that's about average for Qs, right? But this is my thought that we do fade into the motion. Okay, listen, that's it for me. Oh, wait, RTY. A lot of people talking about what's going on with the IWM, the RTY. This is kind of a big deal, actually, because we are at the very top of the range here in the small caps. Look at the monthly formations here. They're horrible, right? But what did we see? Every single time this has happened, if we spike, we fade. So recency gives us a probability of near future. And so spike and fail, spike and fail, spike and fail. Now, you could trade this spike. Absolutely, you could trade this spike. But the key event is to say, wait a second, am I trading into resistance? What does that resistance look like? And if I want to take a trade north, do I say, let me take a peek at the pullback. Notice 1, 2, 3, 4, 5. 4 of 5 candles up, retrace almost 50%. A slurry of candles up, retrace the entire thing in 3 days. A slurry of candles up, guess what? Patterns repeat themselves. So watch for that. Be cautious. Trade with the trend, but don't simply assume price action is going to keep flooding in one direction. That is not how markets work. Says the girl who watched 2020 with a mouth agape saying, holy cow, that's not supposed to happen. But these are normal days, or as normal as can be, and so the market action is looking a little bit different. Stay frosty, folks. We've got good price action here that we can trade intraday. You just want to make sure that you are bounded by the risk.